In recent weeks, a real scandal has erupted in economic and political circles. Major Japanese corporations have begun massively closing their factories in the United States and relocating production to China. This decision seems almost incredible, given decades of close economic cooperation between Washington and Tokyo, but experts say it is a direct consequence of the tariff policies of the Donald Trump administration, the rapid rise in production costs on American soil, and profound changes in the global supply chain. According to Nikkei Asia, the first steps have already been taken in the automotive sector. Toyota, Honda, and Nissan have officially confirmed cuts in investments in their American assembly plants. Moreover, according to sources in Japan's Ministry of Economy, some production lines will gradually move to China, where tax and logistics burdens are significantly lower. For the United States, this decision was a shock. Japanese auto manufacturing has long been a symbol of reliability and technological excellence in the American economy. It is particularly notable that this is not limited to automobiles. Major technology giants, Sony and Panasonic, have also announced plans to shut down certain production capacities in the United States. Insiders close to Sony's management told Asahi Shimbun that the company is considering moving all TV and home electronics assembly to China by the end of 2026. Panasonic has not officially confirmed this, but several experts point out that such a move aligns perfectly with the company's recent strategy of increasing integration into the Chinese market. American media describe these developments as the quiet exit of Japanese business. The Wall Street Journal notes that while Japan once viewed the United States as a reliable strategic partner and guarantor of stability, in Tokyo, there is now growing talk about the risks associated with Washington's political unpredictability. Protectionist policies and tariff wars have essentially forced Japanese corporations to choose between operating under a constant threat of new duties or relocating production to places with predictable and favorable conditions. The rapid rise in production costs in the United States also plays a key role. According to analysts at Boston Consulting Group, the cost of manufacturing cars in American factories has increased by 35% over the past 5 years. The reasons are clear: rising wages, labor shortages, and higher energy prices. In China, despite global challenges, a more flexible model remains. Tax incentives, developed infrastructure, and subsidies for foreign investors. The American automotive sector has been hit particularly hard. Toyota Motor Corporation, which recently opened a new plant in Texas with much fanfare and White House support, is now reducing shifts there and moving part of its orders to Chinese facilities. Honda is considering closing its Ohio plant, and Nissan has officially announced production diversification with a focus on China and Southeast Asian countries. All of this occurs against growing pressure from the Trump administration. The White House claims that the tariffs are meant to protect the American manufacturer, but in practice, they hit U.S. allies first. As the Financial Times writes, Japan has become a hostage of other countries' political games, forced to adapt to changing rules. Interestingly, the decisions of Japanese corporations are supported not only by the business community, but also by a significant portion of the political elite. Former Japanese Minister of Economy Yoshiro Mori stated in an NHK interview, "We must think about the future of our companies and jobs. If America closes, we must look for new opportunities, and China is the natural choice." In Beijing, the developments are being commented on with noticeable satisfaction. Chinese state media call the relocation of Japanese factories a victory of rationality over politics and emphasize that Asia must build its economy without dependence on Washington. In the United States, the situation is seen as a warning signal. Economists note that the departure of Japanese companies will be not only an economic blow, but also a symbolic one. Bloomberg analyst David Rosen says that if even Japan, a longtime ally and partner of the United States, is moving its factories, it means trust in the American economy is on the brink of crisis. The political consequences are also clear. In Tokyo, the idea of a turn to Asia is increasingly discussed, a strategy in which Japanese corporations will rely less on the United States and integrate more into regional supply chains. This process is already being called the New Eastern Strategy. It is symbolic that the process began in the automotive and electronics sectors, industries that for many years were considered the flagships of Japan's presence in America. The closure of Toyota plants and the relocation of Sony and Panasonic facilities create a domino effect that could push other corporations towards similar decisions. While tensions rise in the United States, in Japan, this step is seen as a necessary but unavoidable measure. Nikkei Business writes that Japanese companies are tired of the unpredictability of American policy. They cannot wait each year for new tariffs, taxes, and restrictions. China offers stability and long-term prospects. Interestingly, many Japanese experts emphasize that this is not only about tariffs and the economy, but also about reputational losses. In recent years, the U.S. administration has repeatedly publicly accused Japanese corporations of unfair competition, putting them on the same level as Chinese manufacturers. In Tokyo, this has been perceived as humiliation. Waseda University professor Takahiro Suzuki notes that America is pushing Japan into China's arms, even though it has been considered its main ally and partner for decades. Meanwhile, Japanese companies are already receiving red carpet treatment in China. According to the South China Morning Post, the authorities in Shanghai and Guangzhou are preparing incentive packages for Sony and Toyota, including free land, 5-year tax holidays, and simplified conditions for hiring personnel. Experts say this will become one of the largest investment agreements in Asia in recent years. Another important factor has been the transformation of global supply chains. In recent years, China has managed not only to build a powerful industrial base, but also to create an ecosystem around high-tech industries. For Japanese corporations, this means not just lower costs, but also access to shorter and more flexible logistics routes. Where American supply chains often face delays and bureaucratic red tape, China has accelerated mechanisms to support business, including special economic zones and industrial clusters. Localization is also becoming advantageous for the Japanese. The Chinese market itself is the largest consumer of automobiles, household electronics, and high-tech solutions. Moving production to China allows companies to manufacture and sell products locally, avoiding double expenses on transportation and customs duties. In the case of automobiles, this represents millions of potential buyers each year, making China a top priority for Toyota, Honda, and Nissan. The American model, by contrast, has become less attractive. Even considering consumer demand in the United States, production there has become too expensive. Key indicators such as electricity costs, wages, and factory rental rates are consistently higher than in China. Moreover, in recent years, U.S. states have competed actively for corporate attention, but the incentives they offer cannot match the scale of Chinese subsidies. For Japanese companies, which rely on precise calculations and long-term strategies, the difference has become glaringly clear. Meanwhile, a serious discussion is unfolding in Japan about long-term strategy. Many political analysts note that relocating production to China effectively marks a new era in Japan-China relations. Whereas Tokyo previously maintained a cautious stance toward Beijing, balancing between the United States and Asia, the choice now clearly favors its eastern neighbor. As a result, autumn of 2025 may go down in history as the moment when Japan seriously shook the foundations of its economic alliance with the United States. If corporate plans are fully implemented, the consequences will be irreversible. America risks losing not only jobs and investment, but also its status as a key hub for Japanese business.